Hey, everybody, thanks so much for jumping on here. I appreciate it. And the reason why we're here today is we want to learn about reverse mortgages. What we want to do today is just to kind of take 25 to 30 minutes and go through all the ins and outs, the most pressing questions that people ask every day about reverse mortgages in a really safe environment so that you could get all your questions answered and find out if this might be a good financial solution for you. I'm here with Angela Conrad, and she is an expert in the field, and I'm really excited to have you here. And
Thank
one of
you.
the things that we're also going to do is we wanted to go ahead and we're going to give you a copy of this book, the Understanding Reverse Mortgage book. It's about 100 pages, and we'll send this straight out to you if you'd like to learn more. And basically, what the main goal here is to find out more and see if a reverse mortgage is going to fit you in your financial situation. Okay, so let's go ahead and dive into it. Okay.
Wonderful. Let's do it.
All right. All right. So a little bit about us. I'm Jason Wheeler. I'm a loan consultant and a broker associate with C2 Reverse. And I first dipped my toes into the reverse mortgage market around about 2019. And I'm really excited to have Angela here because she has been around the block with reverse mortgage. She's a CRMP. There's very few CRMPs throughout the country. So I'm going to go ahead and let you go ahead and take away, Angela.
Oh, thank you, Jason. Thanks for having me. So my name is Angela Conrad, and I've been helping people specifically with these types of loans since 2006. In 2010, they created the Certified Reverse Mortgage Professional designation, and I was one of the first ones to attain that designation. It is one of the highest, it is the highest designation that you can receive in this industry. We're here to help you learn about reverse mortgages and, to get your feet kind of wet, so to speak, get in learning about these. And if it's something you want to learn more about, to find out whether it's an appropriate product for you in your retirement.
Yeah, I know that a lot of seniors find it very overwhelming. With there's a lot of negative chatter in the world about reverse mortgages, but what most people don't realize is that there's just so much opportunity to make this as a financial tool for your retirement, and it just to make those years of your life so much better, where you can still stay in your home without having to worry about making these big monthly payments, right?
Yep, that's exactly right. It's a powerful cash flow tool.
All right, so let's kind of jump into it, and we'll go ahead and mark this down a little bit here. So, what are we going to learn in this class, Angela? Do you want to dive into it a little bit?
Sure. So a reverse mortgage, these are special kinds of loans. So we're real well versed on regular mortgages, we call them forward mortgages in the reverse world. But many people know conceptually what a reverse mortgage is, but not exactly how they work. So most of the time, the way they are used as a cash flow tool oftentimes to eliminate monthly payments. You qualify based upon your age and the value of your house. And the younger you are, the less you qualify for. The more older you are, the more you qualify for. And out of the amount that you do qualify for, if you owe anything, that's paid off. And then so that eliminates that mortgage payment. And anything in excess of that amount, you will have access as in cash or credit line or monthly payments or however you'd like to use it.
Okay. So when someone gets a reverse mortgage, they not only they get rid of their old forward mortgage that has monthly payments, and on top of that, they're also able to utilize the equity that they've built up in their home over so many years of living there. Is that correct?
That is correct. It's very similar to a HELOC, but there's no payments that are due.
Gotcha. Wow. Wow, that is powerful. Okay. All right. So let's go ahead and move on to the next. So what is a reverse mortgage, Angela?
So it's a cash flow tool. It's a special type of loan that's been designed. It came around in the 1980s and was signed into law by Ronald Reagan. And the reason is to provide cash flow to older homeowners, a way to access equity without having to pay it back during their lifetime, if that's what they choose to do.
Gotcha. Okay.
Those funds can be used for anything. Most commonly, they are used to pay off a first mortgage and to eliminate those payments. But oftentimes, they are used for updating people's houses. You can oftentimes they're used to use for care, to self-insure for long-term care.
Okay. Long-term care. Yeah.
Yep, long-term care. And just for those big purchases, you might need it. Maybe you'll need a new roof in your future. Maybe you'll need a new car. Maybe you have excess bills you'd like to pay off. So the money, it can be used for anything. There's really no limitation.
Yeah.
It is simply a loan. The bank does not own your house. So when you do a reverse mortgage, you're not giving away your title. It's like any other loan. You have a lien on your house, and that is how a reverse mortgage works. It's simply a lien.
I know this is a big one that people ask me all the time. They're just worried that, that with a reverse mortgage that they're going to lose their home and that the bank owns their home. And it really is just like any other mortgage where, it is a loan and there's terms to that loan, but you still own your home just as you would if you had a forward mortgage, correct?
That is correct.
Yeah. So that's really important to bring home. The bank does not own your home.
Yeah, that's correct. Now, our presentation says there's no monthly payments that are due, but if you choose to make a payment, you can do that. There's no prepayment penalties on these. Traditionally, they are not a short-term loan, but you can do a reverse mortgage for a short term if you choose to. But commonly, it isn't used that way. It's usually a final loan for your retirement home. That is oftentimes the way it's used.
Okay.
Um,
So yeah,
and
it's not a type of product where you'd want to get one of these and refinance out of it every 3 to 6 months. This is a long-term deal that really that's really supposed to set you up for retirement years, correct?
Yes, and it needs to be looked at in your entire financial plan. So,
Mhm.
is this a home you're going to stay in over a long period of time? Does it fit your needs? Is it close to the people and the that you want to be close to? These are the long-term questions that you start asking yourself when you retire. Generally, how these loans are paid back is when you either pass away or you sell your house. That's generally when they are paid back.
So the main thing here is that homeowners that get this loan can stay in their home for as long as they live, for the most part.
That is correct. Yes.
That's very, very important. Very important to a lot of people. Okay, so let's move on here. Over 90% of Americans want to stay in their home as they age. Age in place. I like that idea.
Yes, and this is an ongoing trend, especially since now the baby boomers, I think they're saying that there's like 16,000 of us that are turning 65 every single day. Most of us want to go out feet first. That's our goal. And even some of the, on some of the trends are that some of government benefits are helping people stay in their homes because it is more cost efficient for them. And a reverse mortgage was designed to support that goal.
Okay. All right. So let's check it out and see basically how that does that. How much money can a borrower receive from a reverse mortgage?
So generally, in the forward mortgage world, you talk about loan to value. In the reverse mortgage world, we usually don't use those terms. If I was forced to use that term, generally between 35 and 43% is what you could access in liquidity with a reverse mortgage. They are based upon the current market conditions, the age of the youngest borrower, the value of the house, the programs that are available, because sometimes there are new programs that are introduced on the market, and the current interest rates.
Gotcha. Okay. And these things are they've recently changed to better benefit the homeowner, haven't they, Angela?
Yes, so when these were first launched back in the 1980s, there was a very little regulation. And as a result, it was a little bit of the Wild West. Since then, our government, they've stepped up, they've regulated it so that these are very safe loans to attain for older homeowners.
Good, good. All right, let's talk about the payout options, flexible payout options. And obviously, like you said before, it depends on the program that you chose. But let's talk a little bit more about how people can get their money. Let's say that somebody comes in and it looks like they could get a good amount of money that's going to benefit them. How are they going to get that money?
So it is regulated how you can take the money depending upon the program. For the fixed rate programs, there's a one-time lump sum cash out. at the end, at the close of your loan. And that is very appropriate for some people. And that particular program is oftentimes used for a reverse mortgage for purchase, which is another hybrid way to use these loans. You can actually purchase with a reverse mortgage. The
Okay,
most
you could actually purchase a home with a reverse mortgage and not have any monthly payments.
That is correct. So
Wow. Okay.
just generally, if you could think about putting 60% down of sales price and then having no payments for the rest of your life.
Interesting. Great.
So
Okay.
that is one way to use these loans.
Okay.
The most popular way to take proceeds is in a credit line. That's done 90% of the time. And then also you can attain cash. You can set up a monthly payment for a specific amount of time called a term payment. You can additionally set up what's called a 10-year payment, which is a guaranteed monthly payment for life. Or you can use a combination of these things. For
Wow.
instance, let's say you had $10,000 left on your car loan and you want to pay that off. And then you need, I don't know, you want an extra couple $100 a month. And then you might want some extra money as an emergency fund. Depending upon how much proceeds you have available to you, you can set up all three. Take that $10,000 at the close of the loan, and then have $200-300 a month come in for fund money, and then you have an emergency fund set up in a credit
Wow.
line. So they're very, very flexible, and additionally, you can also change out the payout options as you go along.
Wow. So it seems like that there's just a lot of really diverse options to secure your money with these loans that a lot of people just aren't aware of. That's really great.
They're
Um,
dynamic loans, very, very helpful.
yeah. Okay. All right. So let's look at an example of a growing line of credit. You said that the growing line of credit is really the most popular option. You said about 90% of your clients are doing it that way, Angela?
It is, Jason, and this is, go ahead and click it. There you go. So this is the secret sauce of reverse mortgages, and what most people don't know about how these loans work. So in this assumption, we're taking a borrower who's age 62 and they don't owe anything on their house. Their home value, this is the average in California, about $750,000. Maybe that's a little low, but that's that's our assumption. And we've
Okay.
opted to take all of our money in a credit line. Now, the secret sauce of these loans are, let's go to the next slide, is we're going to have a credit line based upon that assumption of $253,000, $253,189, if you can see that in
So
front of you
you're
on your
looking right
screen.
here, right?
Yep, that's right.
Okay. Okay.
Now,
I think this part's really important to understand. So I'm going to try real hard to stick with you on this part. But I think this is a really good example that we need to make sure that people really kind of understand how this credit line grows. So I'm
It
going to
it
try and
is
stick with you.
it's what this is the wonderful part about reverse mortgages. So LOC means line of credit. So we're
Okay.
starting off with a credit line of $253,189. Let's say I'm 62. I want to work for a little bit more. Let's say I want to work for 10 more years. So I want to work until I'm 72 years old. I'll maximize my Social Security at 70, but my plan is I'm going to work until I'm 72, and then I want the reverse mortgage to augment my retirement.
Okay.
The
So
line of
basically what you're
credit.
saying is that you have the credit line, you don't really use it because you're working for the next 10 years. Is
Yeah,
that what the
yeah, let's
example?
just see. Yeah. I'm
Okay,
62. I have a $750,000 home. It's paid for, but I want to work for the next 10 years. But I'm going to set up the reverse mortgage now because I know the power of the line of credit of a reverse mortgage.
perfect.
That line of
Okay.
credit will grow at the same rate as the loan note rate plus 0.5%. In this situation, it is going to grow. Our loan note rate is 6.75%. Okay. Add 0.5% onto that, which that'll equal 7.25. So what that means is that $253,189 credit line is going to grow at 7.25%, and it compounds over time. So by year
Wow.
10, I've gone from 253,000 and change to over $481,000 that is liquid and available to me to take out as I choose.
Wow. So what you're saying is that if you got this set up when you were 62, you knew you were working for 10 years, so you never touched it. It was just set up. You're still not making mortgage payments, but you're not touching your You're not touching your credit line because you're still working. And what you're saying is that 10 years later, when you actually decide to stop working, instead of having $253,000 based on this example, you're going to have $481,000 in that credit line to use.
That is correct.
Wow, that is a lot of growth there. That is really, really, really good stuff right there, Angela.
So, and what gets even sexier about this is that now I'm retired at age 72, and I decide I want to take an $36,000 a year to augment my retirement and I can use that any way I choose to. I can take it monthly, I can take it as lump sum, but I'm going to take it, and as you can see, I'm going to take that for over 20 years on an ongoing basis because I decided I'm just going to take the growth, the increment of growth from my credit line.
And is
And
this where this is where you're drawing from it
yeah,
right
I'm
here?
drawing out that 36,000. What does that turn out to be monthly? How did we do that?
36,000 monthly.
So that's an extra $3,000 a month I'm drawing
Yeah,
to
okay.
augment my retirement income.
Okay. And hopefully you still have Social Security or pension or whatever it is that there
Exactly.
might be, right?
Yes, yes. And then you can see 22 years later, I still have over $482,000 left in my credit line. That's liquid.
Wow.
And I can take that out anytime I choose. I can take it out as a monthly amount. Again, I can increase it. I can gift it. I can use it as self-insurance for long-term care because, by that time, let's see, I'll be 84, and that's the average age when someone might need some help coming into the house.
Hmm.
And if you just take your cursor and go to the far end, you'll see that our property value growing at a very moderate 4%, which is lower than the average in California.
Yeah,
Our
I think
home,
California is even with the recent, we've had a little bit of a downturn, but I think that we're like more like 9% yearly growth.
yeah,
So 4% is a really, really conservative figure here. So I can appreciate that.
yeah, that's the nationwide average since 1960. So that's a pretty conservative outlook.
Okay.
But you can see that our property value continues to grow because it is an appreciating asset overall, and our
Yeah.
retained equity is just over $900,000.
Yeah.
And this is 22
So
years
basically
later.
when you retain the reverse mortgage, you have equity of roughly $725,000. And what you're saying is, 22 years later, you still have equity of roughly $910,000, which is more equity than you had when you started. Plus, you've had the benefit of liquidity, income. And I'm not a tax professional. I know you're not either, but this is it's not taxable income, is it? This is
It's
considered a
yes,
loan.
it's not. It's actually not income. It is not taxable. It is loan proceeds.
Loan proceeds. So the government doesn't come and if you draw $3,000 a month, the government doesn't come tax you on that $3,000.
No, no.
Wow, that's
So
amazing.
you can also use to, like, if you needed, excess funds from your investment accounts that are in excess of what is it, the RMDs, the required minimum draws, right?
Yeah,
So if you need money above that, you get hit pretty heavily with taxes, is my understanding. Whereas you can use the reverse mortgage to avoid taking out those excess of the RMDs, is another way to use these loans.
gotcha.
And I want to kind of what's the word for it when you hone this message in real strongly? It's really
Okay.
important to plan with these loans. So take a look at your entire picture, what your goals are, what your budget is, what your retirement income is, what your property value is. It's very important to look at the entire picture. And these are not, it's like any other mortgage planning. It's not something you do on a whim. It's something you plan for.
Yeah. But it looks like based on this scenario, and this is a very conservative scenario, I would say, especially by California standards. These are national numbers with the 4%. But this is a very, very conservative example, I think. And I think that what they've done a good job is by making this program so that, with equity appreciation and growth, you have you have access to a growing amount of money as you age, which it doesn't look like in most cases. You're going to lose a ton of equity when you're using that. I mean, you're still going to have a very, very good equity position as the years go on. Is that pretty much what you're saying with your clients?
I am, but again, it is all about the plan and your unique situation because there's
Correct.
never a vanilla
Yeah.
There's never a vanilla plan or a vanilla, transaction. It's really important to take a look at your overall picture.
Yeah, life happens, and you definitely don't want to go out and spend $300,000 on a crazy vacation or trip around the world or anything like that.
Well, no, no, not at all.
Yeah.
But
Okay.
so,
So,
I mean, you can also use these funds, sometimes they are used to gift to a child for a down payment or
yeah, that's good.
grandchildren's, college funds. It
So you
really
want to be smart with the money, but you're free to use it how you like. That's what you're saying.
correct. That is
Gotcha.
correct.
Okay. Well, this is an amazing example. Is there anything else that you think you want to touch on here?
And I don't think so. I think that we pretty much cover it. Just this is the secret sauce that
Yeah.
most people do not realize how a reverse mortgage works. And the growing line of credit is definitely the most attractive and the
Yeah.
most powerful part of it.
So one thing that I'll drive home at this point is if this has piqued your interest at all, this part of the example, it's really, really important to get with me or Angela, give us a call, ask us your questions, because again, it is a very personalized thing, how these numbers might fall for you. And if you want to know how this looks for yourself, you definitely are going to want to go ahead and get with one of us and just get these numbers put together. We'll work as a team and we will definitely show you what your financial picture will look like, right? And it only takes a couple minutes, right?
That's correct. Oftentimes I'll help people on the phone, within, 10 minutes.
10, 15 minutes. Okay. All right, let's move on then. The most common uses for a reverse mortgage. Let's jump into that.
Sure, eliminate the house payment. That's the number one way that people do use these loans to increase that cash flow.
Okay.
The second way is to turn equity into a growing line of credit. Oftentimes I'll see both of those, that it's used to eliminate the house payment and also to set up that credit line. So it's a combination. You might have some deferred maintenance on your house. Maybe you need a new washer or dryer. Maybe your hot water heater is older. Maybe you know that in another 5, 7 years, you'll need a roof. Oftentimes it's used for that also.
Okay. We talked about
Supplement.
supplementing income.
Yeah,
Yeah,
so
cash
we
flow.
did. Yes, we did.
Credit. Oh, this is a big one. Credit card debt. People are swimming in it right now. Medical bills, home care. This could really be alleviate for a lot of people. So basically anything that you could think of reasonably, you could use these funds for. So that's great. And you said right sizing, purchasing a new home. I think that's one that most people have no idea about. You could purchase a home using a reverse mortgage. So
Mhm.
that's something.
Yep, and it's becoming more and more common. Even among the elderly. I've done the home for purchase for people in their 90s
Yeah,
previously.
yeah. Okay. All right. So things to consider when deciding if a reverse mortgage is right for you. This is all important. Okay. So how will you use the money?
Yep. What is your goal? That's one of the first things that I'll ask.
Okay. Do you have the income to stay in your home and live comfortably?
It's very important to have a budget and to make sure that you can pay your property taxes, your homeowner's insurance, any HOA fees, and also take care of yourself. That's the most important part.
Absolutely. And does your
That's
home fit for you? We just came into one that was where somebody was looking to stay in their home and their home was just way too big for them, right? So I think that's a really, really big part of it. Does the home still fit you for your retirement years, right? So
that's
that's
right.
that's a big deal. Um, great. And when you touched on taxes and insurance, I don't know if we're going to touch on that a little bit more, but that's really the main requirement for making sure that these loans stay up to date and stay in compliance, right?
So there are three items that are very important. Well, actually, well, the two items I should say is that you live in your home as your primary residence. That's and once a year on the anniversary of your loan, you will attest to the servicer that says, "Hey, yes, this is my home. I live here." And the second item is to pay your property charges, which either are your property taxes, your homeowner's insurance, and if there's any HOA fees. Those things must be maintained. Other than that, a reverse mortgage is simply a mortgage.
Those
Um,
things have to be maintained no matter how you own the property, though. So
yeah, that's
that's
true.
very
That's
important.
true.
All
That
right.
is true.
So here's one thing that I love about reverse is the non-recourse feature, non-recourse loans. What does that mean? Most people don't even understand what that really means. Can you dive into that for a sec?
So I'll tell a little story about this. So we've recently gone through this great appreciation, these record low rates. But back in 2006, when I first started doing these loans, that was just prior to the Great Recession. The purpose of the mortgage insurance that's required on these FHA insured loans is to create industry stability. It also allows the lenders to offer what's called a non-recourse feature. And the non-recourse feature means that if your loan value exceeds the value of your house when the loan becomes due, the insurance kicks in and pays the lender the difference on your behalf. And on the other side of that, if something would happen to the lender, then HUD, our government, actually takes over the servicing of your loan. Now, I do have a story with this. So back 2006, when I was first in this industry, I did a loan for an elderly couple who had a condo. And a couple of years later, in 2008, they called me because they were concerned on their mortgage, because on their mortgage statement, their loan value exceeded the value of their house, right? So, and I said, yes, once I took a look at it, yes, indeed, they owed more than the value of their house, but they still had $55,000 left in their credit line that is still available to them.
They can
This is
still
what
use it.
they can still use it. This is the purpose of the mortgage insurance. In traditional lending, let's say if you had a HELOC and that would happen, the lender would shut down that HELOC.
For sure. Absolutely, they would.
They'd
Yeah.
reduce it, shut it down. You have no access to no more money. But with
Yeah.
reverse mortgage, once the credit line is set up and you maintain that, it works independently from your loan value. Here's your credit line, loan value, and home value. They're independent of one another once the reverse mortgage is established.
So essentially, it's impossible for you to owe more than what your home is worth. Is that correct?
You are not responsible for anything that's in excess. That is correct.
Gotcha. Okay. Okay, great. Well, yeah, that's one of my favorite features. Medicare, Social Security,
Not affected.
not affected.
It's not income.
So
It's
you
not taxable.
so you still get to get all that stuff, all those benefits still come into you, huh?
Yeah,
Great,
absolutely.
great. All right, qualifications.
So you have to be 62 or older. If your spouse is under 62, we can still do the reverse mortgage, but the reverse mortgage will be based upon the younger underage spouse.
Okay.
Okay. It must be occupied. Oh, and let me backtrack here. So we do have proprietary products that at age 55 you can qualify for.
Gotcha. Okay.
Okay. The house must be your primary residence.
Mm-hmm.
And we don't do an actual you don't qualify based upon your debt to income ratio, which you can talk about, Jason, like traditional mortgages. But we go through what's called a financial assessment, which means that we're looking for your willingness and your capacity to meet your financial obligations and the obligations of your property. So it is a softer qualification.
Nice. Okay.
And there is a safety regulation of third-party counseling. What the purpose of the counseling is, well, let me backtrack, sorry. All reverse mortgage borrowers must go through a third-party counseling session. It's usually done over the phone. It lasts about an hour, and it is independent from the lender, and it's independent from ourselves as the originators. And the purpose of the counseling is to make sure that you understand the loan, your obligations to the lender's obligations to you, and that it's a good loan for you, that it's an appropriate loan for you.
Yeah, I think that's pretty important as well. So you are required to go through independent third-party counseling through HUD. And I
That's
think
right.
that's a good
I've had people that didn't graduate from high school, and I've had PhDs go through that counseling.
Gotcha.
Everybody
Okay.
goes through it.
So what are the contract requirements? Let's go through these kind of quickly.
Okay. Again, you must maintain it as your primary residence. You are responsible for all the property charges, and you also must maintain your home, which you would do anyway, because
Yeah.
this is your house, right?
Yeah, it's all easy stuff, right?
Yeah.
I think that's a big one. What are the fees to obtain a reverse mortgage?
So there's an origination fee. There is an appraisal and counseling fee. These are your only out-of-pocket costs generally.
Okay.
And then there is an initial mortgage insurance premium of 2% of your appraised value that is financed as part of your initial loan balance.
And all that could be financed into the loan, so you don't come out of pocket with this stuff necessarily. But one of
No,
the things that I looked at,
yeah, all the fees with except the counseling and the appraisal are all part of the initial loan balance. So it's a very easy to get
yeah,
into.
and one of the things that I really like about the reverse mortgage is that even though somebody initially could look at these closing fees and the mortgage insurance, think, oh, that's too much, but in reality, if this reverse mortgage allows you to stop making mortgage payments, a lot of times you're going to recoup those costs within just a couple of months, right?
Just a couple of months, and if
Yeah,
you if your situation allows you to have that growing line of credit, that's offset by that growing line of credit very quickly.
gotcha. Okay. All right. That's typical refinance fees, which are title, escrow, recording. Um, that's typical with any mortgage refinance.
Correct.
So,
Mhm.
okay. Pros and cons. The pros.
So oftentimes when I'm talking to people, they are, there's stress because they're retired and they might still be making a mortgage payment. So more cash flow means less stress for sure. Increased quality of life. Um, I really like the idea of using reverse mortgage in comparison to long term. Well, I shouldn't say that. It's not, but as a choice maybe for long-term care, self-insuring long-term care. It's very easy to use. You can ask for the funds within 5 days. It's in your bank account. You don't have to go through any kind of elimination period. It's not medically required, that you have any kind of documentation. It's these reverse mortgages are very, very flexible. It allows people
Maintain.
to feel independent and maintain control of their lives.
Absolutely. Okay. So there's a lot of pros, but there are some cons to everything. So let's jump into that part as well.
So typically it's not used as a short-term loan, but I have done it once and possibly another time, when people are prepping for a sale or something like that, and this is going to give maybe they need it for 5 years, so they can maximize their sale price. I have done it for that. Um, it might not be in your financial lifestyle. It might not be something that you personally just want to do. Maybe you want to accumulate as much money as possible and you don't need the cash flow. Or if you happen to have a dependent person on you, maybe someone who's going to need additional care after you've passed. Maybe you need to continue to accumulate as much wealth as possible to take care of that loved one. So there are situations where reverse mortgage may not be appropriate.
Yeah. Okay. So other reverse mortgage items
It
can be
can
used for
be used,
purchase,
yep, for purchase, like we talked about.
counseling by HUD, certified counselor,
Hmm.
and borrowers are, yeah, so we touched on this quite a bit. FHA insured, so it's government insured mortgage.
These are safe
Um,
loans, definitely very safe
very
loans,
safe. Yeah.
highly regulated.
What happens when the loan becomes due?
So when the loan becomes due, and just like in Social Security, you must let the servicer know that the borrower has passed away within 30 days of them passing. At that time, they'll issue a letter that says the loan is due and payable, and they will ask the heirs, what is the intention of the family? Do they want to keep the house and refinance it? Or do they want to sell the house and keep the proceeds? Either way, they're going to be asked to either present a listing contract or evidence that they're working with a lender in order to refinance the house to keep it.
Gotcha. Okay. All right. So, recommended readings. I like this part. Use
So
your home to stay
yeah,
at home.
yeah. So use your home to stay in home is a booklet, and it is part of the required reading for the reverse mortgage counseling. That's generally something that I provide our borrowers when we're working with them. And then there's also a couple of wonderful books by a gentleman named Dan Holquist. Reverse Mortgages Made Simple and Understanding Reverse, which is the book that you mentioned earlier.
Yeah, we're gonna, if you're interested in learning more, we're gonna give you a free copy of Understanding Reverse. It's only 100 pages. It's really, really easy to understand. So if you want to dive in more, just let us know, and we'll mail this out to you, a hard copy, out to your address, and you can really dive in deep and see if it's something that's going to be for you. Okay, as well as the info pack and anything else. We'd love to answer your questions. So I think that's the meat of our presentation, right, Angela? That's basically everything that we want to convey, right?
Yeah, it is. And I would just encourage our viewers to, take down one of our numbers and or our email addresses, and shoot us an email or a text and let us know that you have some questions about reverse mortgages, and we'll be sure to get that book out to you and our info pack out to you. And, we're here to help you. These are
Yeah,
not these are not loans to be just to look at the numbers like you would like a traditional mortgage.
yeah,
You want to look beyond that, because this generally is a retirement mortgage, your final mortgage
yeah.
as a rule.
What I found is that a lot of people are really afraid to take that very first step. But that first step is once you take it, like you said, you could really be looking at these numbers for yourself within 10, 15 minutes and get a really good idea what you could or could not do, right?
And it's a good idea to look at these
Yeah.
ahead of time.
Yeah. Okay. So we're almost out of time. So what I'm going to do, definitely save our number. We appreciate you guys being here. I know your time's valuable, and I hope that you've learned something. I hope that you're coming away with this with some more confidence. I really hope that it's something that you got something out of. We do have a few disclosures that we have to go ahead and go over with you real quick. Like, I would encourage you to screenshot these, or if you're feeling sleepy, just go ahead and read them from front to back and you'll fall just sleep, right? Well, we got some
We're legal.
disclosures from HUD.
We're legal and compliant.
There you go. So go ahead and we appreciate you guys being here. And Angela, I appreciate you a lot. Thank you so much for coming and for spending time with us. And we'll talk real soon, okay?
Jason, you're great. Thank you.
Okay. All right. Thanks a lot. Talk to you later.
Bye.
Bye.